Hello, hello, hello. It's been a while. This is your weekend trade for the week ending January 22nd, 2011. Now, I'm sure that we're looking at gold right here. Take a look at, man, last 5 years. This is the GLD chart representing the price of gold, or somewhat mimicking the price of gold. Let's see, would have bought in 2006 at 60 bucks. Since then, it's increased over 100%, even 100 and close to 115%. But we've seen in here that we've had a couple short-term corrections, or maybe mid-term. This one lasted about a year during the Great Recession. We had a short one right here, and short one right there. And also, there's one that is, let's see if I can move this, right there. So generally, I don't like to go against the trend in terms of pulling short sales, but this one looks like this one had basically a sell signal that said, alright, if you don't short sell here, even for just a correction, you're probably dumb. Now, of course, I'm probably going to be the dumb one since it's going to wind up that I'm going to be wrong. But here, let's go through. We're at the 5-year chart. We're going to move down to the 1-year chart. Take a look what we got here. Still uptrend. I'll throw out some significant levels. This one looks like a significant level at 122.50, maybe 123 about. Alright, so 122.50, we have a nice little uptrend here. That one got broken though, so I won't even draw that line. Looks like the stock had a bit of trouble getting through this level here, 140, about just a little less than 140, maybe 139. Had a little trouble getting through that, so that's our resistance level, and I'll move that just up a little bit to represent the top one. And then we have right here, I'll change that color to kind of pea green. No, that's no better. Just a second. Oh heck, we'll go with red. We have on these two levels right here, look closely, right there and there, just a little bit lower, about at the 138.50 level. No, 138.70 level. This one stopped around 139.50, so just $1 difference, very little, but that difference is very significant. And we have down here our trend line. Take this trend line and we can extend it, and to some degree we can even stretch this and say, maybe we could put this line down here at the bottom level, right at that break line. And I'll also change that color back to our yellow. Okay, so as we see right here, had some hard time getting through that price, and right there having a hard time getting through that price going the other way, and also acting as resistance right there. Alright, so we got that far, and now we're taking a look at this trend line right here. This one won't be as significant, because that one's actually, I'm not even going to do that one. It's kind of a steep angle for me. Alright, so just finishing up. Oh heck, we'll do it anyway. Okay, so drawing this trend line right here along the bottoms. Note that level right there. I'll change this color. We'll also make it red. Alright, let's take a look at our signals. Alright. We got the 1-year chart right here. And it's going up, everything's just peaches and cream. we're going to zoom in here, and this is where it looks like we're going to have some trouble. Alright, now I zoomed in here and I made it a specific point to say that right there and that right there, the levels are each $1 below this level. Alright, and let's also take a moment to mention, see if I can just zoom this into a little better. Take a look at the volume here. The volume on the first one, very high. Second one, getting lower. Third one, the volume on the upswings, tiny. What does this look like, ladies and gentlemen? Yes, that's right, a Head and Shoulders. The most reliable chart pattern that we know of. Head and Shoulders, not the shampoo. So what do we got? We have a couple sell signals here. The first one is we see a swing failure, which means that there failed to break that high. So that's our sell signal number 1. Then we have our sell signal number 2, which is the breaking of this trend line. And these aren't specific sell signals, these, unless you're very aggressive. These are just red flags. That one, breaking that trend line, as we see. How many touches does this one have? 1, 2, 3. 3, it's a significant trend line. So we should take heed of that. Next sell signal. Another swing failure. Right here. That fails to break above that level. Next one, we see all hell break loose. And this is our, well, here, one more. Next one, that trend line is broken, the blue one, okay? How many touches do we have on that one? 1, 2, 3, and broken through on the fourth one. Important trend line still. 3 touches means it's significant. And finally, when the excrement hits the fan, and I will make this color a nice hot pink, that is our sell signal right there. And happened today when we saw a major gap down in gold from the 134 level all the way down to the 131 level, and it broke down on high volume. So we have a classic Head and Shoulders with a breakout pattern here. And how do we do our measuring formula? Let's see where we think it's going to go. We're going to take our top move, so about 130, 139.50, bring it down to our neckline, which is about there, and I'm going to leave that blue, hope you don't mind. And we're going to take this, duplicate it, flip it upside down from that level, and make it inverse. Alright, where is our target? Right here. Gold hitting $1,250. And we expect that in, let's see, this movement took about 1 month, 2 months, 3 months. We can expect this in about 3 months to hit this level, but in the meantime, make sure that we know that we're expecting it to hit that level. It might get there earlier or later. Alright, so we're expecting it to hit 122.50, and unfortunately with the breakout, the oscillators, stochastic is not giving us any good info, so I'll crush that one. But the relative strength index isn't giving us an oversold, even though we have this big move that happened today. And we do have this down moving trend line too, which is also somewhat bearish. Alright, so 122.50. What also adds credence to this? 122.50 is a significant resistance and support level. How many touches? 1, 2, 3, 4, 5, and that one briefly recessed when it hit that level 5. So we got a significant level right here. So my prediction, gold hitting 1250. When do we want to get into this trade? I'll move into the shorter term chart. Get rid of these circles here. Alright, moving to the shorter term chart, let's see what we can do. Alright, our significant level is the 132 level, so I'll draw that line there. It's the 132 level. That triangle's been broken. So movement even a little more. And we see this movement today. So what we want to do, you can put in an order and it'd be a great low risk order. Get in at about, I got in at exactly 132. Do I think it's going to go up there again? Maybe. Sometimes head and shoulders pull back like that. It's called a pullback rally. So I'd guess put an order in for 131.90. All right, and that's if gold's going to go up tomorrow. Which who knows? It might or it might not. If it does go down tomorrow, keep an eye on which level. Keep an eye on $131, and you could probably get in. I'm looking at this right here, 131, and by all means, if it breaks below 130 and closes below there, it doesn't matter. Just get into the position. All right. Where's our stop order? Stop order is, let's see, significant resistance level. 1, 2, 3. All right. 134 is our stop level, so we are risking $2.10 per share. Our expected gain is down to 122.50, which is grabbing my calculator. I'm just going to say for the sake of argument we're getting in at 131. Yeah, 131.90. 131.90 is 122.50. We're expecting a $9.40 gain per share. Our risk reward ratio is 4.48. Which, that's pretty good. As long as it's under 3, you're fine. Anything getting above that, that means that you're taking even less risk with it, which is good. So you expect for every $2.10 that you're willing to lose, you're expecting to gain $9.40. Alright, so not too risky. I think that we actually have a pretty good trade here, and people aren't going to know what hit them when they see gold plummet and about 12% or so. So there's a trade to get through the weekend. If I were you, I would get in tomorrow or the next day, because these moves tend to have a strong tendency downward. Like, let's take a look at this one. We see how this one moved. That was a head and shoulders, shoulder, head, shoulder, and immediately gap down, which we just saw in GLD. Gap down right there. And see, barely a pullback. And it's tanking right now on the way down to 62.50. Alright, and coincidentally, this stock right here is a gold mining stock. Alright, so you know it. Short gold tomorrow, preferably at 131.90. Get in at 132 if you can. Short gold, expected price target within the next 3 months is 122.50. And then from that point on, we will put our stop price if it closes above $134. Alright? So we're pretty much set now. And there's all my drawings I made before. Alright? Good luck, happy trading to all.